The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, this 15th day of May. No way. 15th day of May. Halfway through the month. Oh, time is flying. Down 163 in the Dow at 16,451. I'm going to explain chart patterns in a moment, explain why we were talking yesterday about having gone short in many sectors yesterday at the opening, and why I discounted the S&P having only made a peak C. I'm going to talk about particular chart pattern. In fact, I better talk about it right now. I just know that I'm going to forget about it later on. You see the USD JPY, that's the dollar Japanese yen currency pair. See that spike in the 120-minute chart right there from the low at 3 o'clock on the 7th at 101.424, spikes up into a single leg A and then pulls back. And then it makes an arch formation all within basically a rectangle. Keep that in mind. You're going to be seeing a lot of these patterns. Whenever I do a Master Trader series, I talk about the patterns that we should be looking at for the following couple of months. In this particular case, this is one of those patterns. Look how often, look, right here, you know, in the Chapman wave methodology, I talk about the pattern. I don't talk about it that often because it comes under the auspices of the H. But in fact, there's a pattern that I call within the H pattern, and usually, this only happens up at the top. There's a pattern that I talk about, which is a right shoulder failure pattern. It happens to be chapter 21, slide 362. So let's do this. We're going to go to chapter right there. Keep moving down. So chapter 21, right there, right shoulder failure pattern. And I discussed this in detail. This is chapter 362, slide 362. There it is, this exact pattern. See, this happens to be Walmart from way back. This is in 2003. This is a daily chart, December. And what happens is it makes a top back in March of 2004, pulls back, 3 troughs, rises to a peak A, B, and then to a C, which turns into a C minus. And that failure becomes an H pattern. And I call it a right shoulder pattern. Here's another one, General Motors, the old General Motors. When it was back, peak F top, right there in the 55 area in 2004, pulls back and makes that same right shoulder failure. So I want to point that out. I want to explain to you that it's a pattern that you probably will see repeated a number of times. We've got it right here. Not only does it make the H pattern with a peak A minus right there. This is a 120-minute chart, remember? But it had made a peak E, and then it went to peak A minus, all within this kind of a rectangle formation right there. Pulls back sharply, has a rally. Within that rally, you could probably have a 5-minute that went to a peak A, B, C, D, and then pull back, because within that rectangle, you always get, not always, most of the time you'll get a Chapman wave bimode. Very interesting, bisignal to bimode that goes back towards the top and either fails just under the top, at the top, or just above the top. But a failure pattern is very often the culmination, especially when you see the technicals like this. So I wanted to bring that pattern up. Now let's go to our numbers. And then I'll talk about the actual, let me get rid of this. Okay. So now we've got the Dow, INDU. It made a peak D top with a silent doji in the 120-minute chart. Beautiful, beautiful example of this. It was peak E in the Dow, 16,735. Let me type that in. I've got it many other places, but not here. 16,735. And what happens is that I cannot go to a direct down arrow unless certain things happen. And one of them is that the stochastic falls under 80%, or the price plunges underneath the 9-period moving average very quickly, and the MACD crosses underneath. And then I can say, okay, pretty close, because when I put in a down arrow, you've gone from a sell signal to a sell mode in whatever we are following. And so at this particular point, the day is young, I cannot do it, but there's a good chance that I will have to put in the down arrow. Why? Because you remember the pattern that I spoke about? I spent a lot of time yesterday discussing it. That is the Chapman wave: leg, body, neck, head, and beak. And beak. That's the stork leg formation. We had one over there. We had one over here. Over here in the weekly chart. Look at that. Beautiful example of it. And the reason why I talk a lot about this pattern is that this pattern is a beautiful forward-looking pattern, because it tells you that when you get the beak, that is the down move, you know how a stork stands on one leg, and then that long body, that oval body, somehow is balanced by the single spindly leg, and then you get the neck, and you get the turn down, you get the long beak. When it turns down, when it's head down, that beak can go quite low. And in this case, the beak invariably goes to where? It goes to the top of the oval formation. In this case, 15,709. Where was the low on the last move down in the weekly chart? It went right to 15,340. Way underneath, 180 points below. So now we've got another one, a mini one, but I said that this is not quite as usual. So the other patterns we're looking at now, I can say that this is either an E or an F, alternate wave count. I don't want to go that far just yet. I'm just going step by step. That's why we implemented the short. Do I care whether I upgrade the short at some point to say now we're going to hold it because we're not going to be rallying? The S&P will not make a leg D. I don't really care about that. We're in position right now. This is bearish activity, 2 triple-digit days in a row from nothing. I mean, there's no real news that's any different to what we've been having. But in fact, there is internally there's news, and that news so far is pretty negative. So that's the reason why yesterday I said that we had implemented shorts. Now, not necessarily they're in different sectors. So we'll see how that unfolds over the period of the day. In the meantime, back at the ranch, we will deal with these other things. Let me explain what I'm looking at. If the Dow breaks under 16,300 in the next 2 days, that includes tomorrow's options expiration, where after today they could easily turn it around just for fun, up 120 points, just because. But if it's down, in fact, that's going to be very ugly. That's number one. Number two is, if 1,300 breaks, there's a real good chance that we're going straight down to under 1,600 with even maybe just a slight pop-up at some point. This could be quick. If the quicker it is, the quicker we get it over with. That's the way I'm looking at it. Now look at the S&P, SPX.X, and I keep going through this. 1902.17. I don't see how I can count it any other way. It made a new high. It made a new all-time high. If it hadn't made a new all-time high, then I could say it can fail under the previous major high. But in this particular instance, I don't know what to say. But the weekly is in D. So if that's the case, weeklies trump shorter term chart pattern. Maybe this will be one of the first times I can remember in recent history of having a peak C minus at an all-time high. It's unusual. But thank goodness I didn't rest my laurels on one stock or one index. I did it with a number of factors, and that's the reason why we are now. In fact, we've taken profits in some of our longs. One is actually working. I can't believe it. It's up 1.28% today, when in fact the general market is down 1.2. So I like that comparable relative strength. But mostly we are pretty much out of almost all our longs. And, you know, this is the reason why I need to explain. I had questions about two things. One is, how could I go short when I was still waiting for the S&P to make a D? I've just answered that because so many other factors, especially the New York Stock Exchange, the very broad New York Stock Exchange, was saying to me, be careful. Even the XLF, let me just do that right now. Even the XLF, which is the financials, had a retracement failure from a peak E-top in the weekly at 2261. Nice counter-trend rally going from the low of about 21. It goes up to where? A leg D 3 days ago, peak D yesterday, and that's another cup, an arch formation. Folks, if you really want to learn about the arches and the cups, left side, right side, price time match, I hope I even wrote down the one that I was just working on. Gosh, I work on so many things that are so important in terms of showing you the analysis process, and then I just move on to the next stock, and I forget to write it down. Anyway, let's do this. We've got right there. Oh, I know what I was looking at. I'll get to it in a minute. I won't get to it if I don't write it down because I will forget. So here we go. So it's the S&P SPX 120. That's what we ESH 120. ESM 120. Okay. So here we go. The XLF has made a peak D-top in a cup formation and should be pulling back. If it takes out, it's a 2163. If it takes out 2140, it'll retest the low of the 11th of April at 2119. That 2119 is very important, not just in the daily, but absolutely in the weekly chart, because if the weekly chart breaks that, you're looking at an arch formation. This is what I call double camel hump. For those of you who have taken my courses, this is where there's a rally. It actually is more like a right arm extension because there was nothing there in the MACD and the stochastic and the XLF. It couldn't participate at all. That was a terrible divergence. So if the XLF, and this is very important, breaks 21, you're going down to that 1950 area for a big test, and then this is why I'm very nervous. Actually, I've been talking about this for a few days. My monthly charts. Remember yesterday I spent a little time going through monthly charts. I don't know how to recount this. It could be a brand new leg B in the financials. But I have to tell you something. If this really is an F and it's being repelled at the 200 period exponential moving average, and you get those financials pulling back, the financials could drop 3. That could be about 15% to 20%. It could drop quite quickly, 3 to 4 points over a period of 6 weeks. So I'm going to watch this very closely. Now let's go to something else. The S&P, SPX.X, I'll give you the parameters. If the S&P takes out 1862 to 1858 in the next 2 days, that's very negative, both in the daily and the weekly. I'll be back straight after this break. Dow down 174, S&P's down 22, and I'll talk about gold as well. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I should also mention I will be doing Larry's show today. I won't be able to do the last segment, but I'll do everything else up until about 12:50. So we got a lot of charts to do. I'd have to take your calls at about 877-927-6648. So the S&P has resistance now at 1880. It's trading at 1864, down 23. If that support goes in the 1858 to 52 area, somewhere around there, that's just not going to be good at all. This could be a really ugly day because it came with such a surprise. And of course, you did get Tapper, who's really one of the fabulous. What can I call him? He's not a technician at all. I'm sure he does some technical analysis, but he's really a fundamental position market. I wouldn't even call him a player, but he invests longer term. And he does it based on his fundamentals, and he got a little bit nervous. Now, what I'm looking at here is the weekly S&P is the one that really counts, since that's 500 stocks. If, in fact, it takes out over the next week, it takes out 1846. That's the buy zone between 1846 and 1825. That's normally where it inflects back up again. In fact, if it just doesn't do that, or I should say deflects lower, back up, deflects from that and gets propelled, well, all I can say is that it's making that arch formation, and watch out, because that candle with the 1737 low is going to be very important. I don't want to go there. I just want to go one step at a time. And the first step says daily is going from almost certainly from a sell signal to a sell mode if it holds somewhere around here by the end of the day. The weekly chart hasn't even given a peak D yet. I have to wait for the entire week next week to get that confirmation. But the monthly chart is saying I'm in leg D. I'm bumping up against the Chapman wave inside track. It's also a channel, inside track resistance. There is a pattern that I didn't draw in because I didn't want to really have a messy chart, but I'm going to draw it in now because it's so important. You see this line right here? That's a rising wedge formation. Now, some of you who know my work, my opening call, one of the reasons I drew this, in fact, I'll show you another chart that I drew. I'm going to expand this just for the moment. This is what my subscribers get every day. Every single day I show the Chapman wave methodology unfolding live because these are peaks that we're looking at, and it went from the low bar of the 11th of April at 16,015 to the 16,735. But before that, I had already drawn in. I don't like to make them too heavy, but I'll make it for demonstration purposes. I had drawn in that rising wedge formation right there. That rising wedge formation is one that I respect a lot. Normally, on a long rising wedge, you'll get a little cup at the bottom, a retest of the top, which will make the Chapman wave double top, that pattern I call the drop bucket, chapter 22, slide 366 in my CD. But if it's just a small little wedge that rises like this, if you take out 1/3 of the price, be careful because you're probably going to test 1/2. If you take out 1/2, you're almost certainly going to test the low, the most recent low, and that would be 16,377. Whereas 16,426 is about 100 points away, but who knows how that can happen. So that's what I drew, that rising wedge. Now, let me go back to the charts that I was looking at before. And that says that in this pattern here, in the monthly chart, this is a very concerted going to the apex. The price movements every month is getting smaller and smaller, and it's getting harder and harder to make very sharp sustained new highs. Now, what do I mean by that? See, each one of these is just modestly higher. You went from 1894.44 in the S&P monthly to 1850.84, a point higher. Next month is 1867.92. That's a nice move, but in a monthly chart, that's not such a big deal. And the next one is slightly higher. And now what we've done is we've gone only modestly higher from last month, which was 1897.28, to this month with a high so far is 1902. Well, that is 5 points, 5 S&P points. That's 50, 60 Dow points, 40 to 50 Dow points, nothing. So what we're looking at is that it's getting harder and harder to make significantly higher highs. And it's in leg D. D is where I get a little nervous. And I've got the on-balance volume at peak A, B, C, D, E, F. And it's turning down. But the stochastic's at 95% and the MACD is still good. How do I put these things together? I'll show you how I put it together, and I'm going to show you. We're going to go to the dollar, we're going to go to bonds, we're going to go to the volatility index. We'll try to make some sense of the likelihood of the 9-period moving average of 1808 being hit this month or next. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. So, yeah, just a couple of questions here. I have to wait all the way through June to confirm that there is a peak in most of these indexes, especially the S&P, the New York Stock Exchange, etc. Question was, will there be a D in the NYA, which is only in C? Well, the NYA can pull all the way back. I would say probably to 10,100. It's at 10,500 right now. Even and then make a sudden spiral to the upside to get to D. But if it does that, it'll not only do D, it'll do a D and an E, and then it'll come back down again. So I don't want to deal with that right now. I want to go through. Let's just continue here. So the GCM, which is the gold contract, is trading right now. It had made a very sharp decline this morning to about around about the 1290 level. It's trading right now at 1299. Most importantly is that in the 120-minute chart, it keeps making these stair-step moves and sudden declines, but it does want to keep, like, I keep saying, like a cork in water. It keeps trying to rebound and come back to at least the medium level of the 1315 to 1320 area. If it does it, that's going to be really important. I'll explain why. Because the dollar, DXY, I'm going to the dollar index right now. Oops, I didn't finish that, did I? So that is, that's going to be A, B, give me 1 second, I think. No, that's B, 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 C, and D. So the dollar's now down 0.05 at 80.02. This is the dollar index. And I need to put a down arrow here because the technicals have deteriorated. That's in the 120-minute chart. And it went to a leg C and then pulled back sharply in leg C. So when I try to put this whole thing together, I'm saying to myself, oh, okay, just go one step at a time. The dollar hasn't yet done it. And this is going to be really interesting to see if there's going to be a rebound next week to try to complete that leg D in the S&P and in the, what did I say it was, and in the XMI index, or if the dollar is going to finally, on a weekly basis, by Friday, by tomorrow afternoon, or Monday at least, start to break above 80.41, which is a 200-period moving average. If it goes to 80.50, doesn't even have to hold. I'd love if it held. If you wanted to be bullish on the dollar, it needs to do that. But the fact is that it hasn't. It's been repelled by the simple trend line. Folks, learn how to use these trend lines. You look for the most obvious peak that you can take it from. I usually don't take spikes to the upside. I like to take ones that have formed very judiciously, very organized. And then what you do is you can go down and look. It's trying desperately. The dollar's desperately trying to break that weekly resistance line, which is at about 80.34 in the continuous contract, the index itself. And if it does that, it needs to break into the 80. Or if the dollar breaks into the 80 60s, then all of a sudden what you're looking at the euro probably testing the it's already tested the up channel, the up trend in the weekly chart and broken under it, but now it's back above it. But what it'll do is I wanted to just show you the daily. This is very interesting. Remember, I spent a whole bunch of time on the patterns, the alternative way. I sent this to my subscribers to show them a particular technique and how you can use the technique. But that 1.361 is the 200-period exponential moving average, and that's what I'm going to be watching really closely. If the euro-dollar currency pair breaks that, closes under it, that means you got to watch that weekly chart, because that weekly chart is now broken key support. It says that it is probably going to be leg F and then a peak F in June, if in fact the euro gets under the 1.35 level, maybe goes to the 1.34. It's a timeout after working hard to move higher, but it's not the greatest of up moves. So now here's the other thing that I want you to look at. Okay, so if bonds, which are now in leg C and have broken but above, but haven't cleared the resistance trend line that I showed my subscribers this morning in my opening call, look at that. That's the Chapman wave up channel and inside track resistance. If it breaks decisively above that, that's going to be important. Why? Because it'll say, hey, folks, those yields are coming down. The weekly chart is strengthening to the point where it's creating huge support from 114 into the 112 to 110 area. The monthly, talking about trend lines, is for the first time challenging the monthly resistance line. We're going to be watching bonds really closely. Put it together, you've got, if the volatility, this volatility index, did it go out for lunch or something? I mean, what is this? Oh, this is the first day. Look, the volatility actually sprang. It's up $1.25, up 10%. Woohoo! Yesterday it was totally asleep. It didn't even know that there was a 100-point decline in the Dow, and that's probably because the S&P wasn't doing all that much. But now it's got the first wiggle. If tomorrow at Friday at 4 o'clock the VIX index closes above 13.95, that'll be the first time it's done that. And you remember we talked about the number of bars. Is this week 14? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Do it again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Yeah, week 14. And every other time we've gotten to leg week 14 or 15 in the volatility index in the monthly chart, in the weekly chart, there's been a pretty good rally and a pullback. So And I heard yesterday for the first time, Rick Zantelli, I don't know, I never remember his name because I've heard him for so long. Rick suddenly said, is there going to be a riding high in April, shot down in May? I couldn't believe it. Who's ever said that other than me? And I said it 2 years ago. Remember back in April, I think it was 2 years ago, when we were riding high in April, and I said, be careful, we could be shot down in May. And then I started talking about that about 4 weeks ago, I guess. So I guess there's an echo. I have a question here, and let me just see if I can. Yeah, this is very interesting. I have a question. I don't think I'm going to answer it on the air because you are still in the trade. I had a trade this morning of a stock that I thought was really acting very well. I showed it yesterday. I put it on as a long, even with all these shorts and everything. I wanted it because each stock at this particular point must be treated separately, must be treated individually. So I said to buy it at a certain price. It's a low volume. I forgot about the volume. So when I checked out the volume, I said, oh, this is a low volume stock. We could have a problem here. In fact, the problem's been, it's good because the stop should have been hit and it wasn't hit. That happens with very low volume stocks when you've got almost book a time when it trades. So I have a question from a subscriber who says, I bought it at the price that he bought it a little lower down. Okay. Because I looked at it earlier on and it looked like the price had been hit. But he bought it a little lower down, almost where I put the stop, and therefore his stop has not been hit, and now it's acting really well. What should I do? And all I'm going to say to him is, you know, the day is young. Anything can still happen. Why don't you do this? It's trading now at $7.04. Why don't you make your stop your entry point and see what happens during the day? Because if by tomorrow there's suddenly a reversal in the market so there can be a rally, this stock should participate in that rally. That's the one question. Next question is, so the other question is, I've been using the SPY for my Chapman wave assessment with Elliott wave to form trading plan. It worked great until today. You know, I don't know what to tell you. I've tried over the years, over the decades, to create a methodology. You know, I have an expression. The Chapman wave is the waveform that never sleeps. And if I try under the umbrella of the Chapman wave to gauge and measure every single peak and trough, every single wiggle of a price movement should be able to be assessed in the Chapman wave methodology. Sometimes you have to wait and then say, oh, that was a whatever it is. Or sometimes you say, I'm expecting like the stalk wave for the neck to break out, then the head, and then a plunge with the beak going at least into the body of the oval pattern that's called the body. I'm going to suggest something. That's the reason why over all these years since 1980s, when I used to have my private hotline, I've used the Dow. I don't know why. I've just every single day just about for all these years, decades, I've done an assessment on the Dow. So all I can say is that's why I used the Dow, and that's why we went short based on the Dow. I can't explain why. I've tried every which way I can do it in the E-minis. I can call. Let me show you something here. I think it's a great question because I like to find out what didn't work and why didn't it work and what can I do in my own modest way to at least try to, in a simplified way, to try to ameliorate that from happening again. If you go to the E-minis, you'll see that peak C that was made at no, I'm not at the E-mini, I'm in the SPY. Wait a minute, if it works in the SPY, then it should work in the Dow itself. I mean, the S&P. So that's an alternate wave count, a G/C. I was locked in as it being C, but that doji candle with the very weak action yesterday said, whoa, at least be careful. And then the MACD and stochastic just starting to turn down. They still, now you see how quickly the stochastic moves. Now it's at 81%. It was at almost 90 the other day, 95 or 93. So now this is what I'm saying. I understand that. I don't know how to actually explain it other than sometimes there's an alternate count. Now, if I go to the S&P, let me explain what the difference was. I think, where am I going? Over there? No, over here. I think that's a great question, and I've been struggling to get an answer to that. Even as it was going there, the Dow was already ahead. Okay, this is, I made a mistake. It's an A to B, so that was, in fact, an F to a G. You know what? That turns out to be a G/C because my impression was I did it. I thought it was an A to B to C, and that was really the D. Oh, let me explain. I don't want to make it complicated. This is the alternate count. I should have had that typed in. I didn't have it typed in. It still hasn't yet explained the weekly chart, but it does explain the daily. And the daily says that's an alternate count, G/C. Everything now says it's probably a G. I wouldn't say certainly because the day's young, but everything says it probably is, and it's got the rising wedge formation that is just broken below. And the reason, now let me explain, this is a little bit of a Chapman wave methodology here. From the low bar of 1737, we've got a call I'm going to go to right away. From the low bar of 1737 back in the 5th of February, it went to peak A, B, C, D, pulls back, pops up to an E/B, pulls back, pops up to an F. And then it pulls back very sharply, but it doesn't even come close to that 1737 level. So this is still active as a potential alternate wave count. That's all I can say. I should have done that. I should have seen it before. I didn't. There's been so much going on that I just missed it. I missed it and I apologize. Let's go to Charlie in Framingham. Charlie, how are you?
I'm well. How are you, Basil?
I'm well, thank you.
You sound great.
Well, I feel good, and I'm actually back to playing some tennis, so I have to be feeling good.
Oh, and the weather's so nice.
Beautiful.
All right. Well, listen, I'm looking at BIS. I'm in it, and I've been in it for a while, and I'm wondering if you can give me an idea of what you think, where you think it's going to go.
Well, I was hoping the BIS, which is 200% short, it's the ProShares Ultra Short NASDAQ Biotech Index, the IBB. So this BIS is trading at 1857, up 81 cents, up 4.59%. Here's my recommendation. I've been waiting patiently, but I should not have been so patient, waiting for the 16s. We got right down to 17.25 back on the 23rd of April, and somehow or other, it just hasn't unfolded the way I wanted it, because we've had it before. I wanted to get back in. Now, I'd already drawn in the arch formations, the H that goes to an M pattern. Let me just show my CD introducing the Chapman wave methodology. In this particular instance, what we're looking at is let me just go to chapter 17 for a second so people can see exactly what I'm talking about visually. You keep coming down, you make arch patterns, and all of a sudden it turns into a lowercase m. And that's exactly what we got. And normally you would see one dip below the important low bars. It hasn't happened. So let's get back to Charlie. And Charlie, can you hold?
Yes, I will. Thank you.
First of all, congratulations for holding. And second, if you hold a little longer.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. I'll be looking at a couple of stocks that were asked about in the next segment. LVS, buy, sell, hold. Apple I'll be looking at as well in great detail, as well as some of the others that I'll pick up in a moment. But we're on with Charlie in Framingham, Mass. We're looking at BIS, which is, in fact, 200% short the IBB. Now, I like this pattern very much. There's a divergence, a positive divergence in the stochastic and the daily. The MACD is making a W formation with a good chance that it's going to cross positive. Now, this is what I'm looking at. I was going to talk about it a little earlier, but I'll talk about it now. One of the reasons why I've held on to our core short position in the IBB from way back at 271.20. The all-time high was 275.40, just 4 points higher, is because I didn't think that it would be easy to get in and out for the core position. And I believed it would be going low. I even drew it in H formation that goes to an M formation. Big resistance I've drawn in with the trend line here. It is being repelled at this particular point from that resistance. I'm suspecting that the IBB at 225.54 will get its greatest test of strength at 222. So this is what I'm going to recommend. I think you had patience. You've been in the right position. My suspicion this is going to be a more intermediate term buy and hold. I'm sure that's what you would like. But I'd also say I'd be a little careful if the next rally in the IBB, if it suddenly occurs, maybe by Tuesday or Wednesday of next week, and it pushes above 235. That's 10 points high. It doesn't sound like much, but this thing moves really quickly. So if it does that, then I'm just going to say to you, you know what, be a little bit careful with the BIS, because you're probably going to get a better entry, and don't, you're in a profit right now. Is that correct?
No, I'm down like a point.
Oh, you are down. If you're down, okay, now we've got two psychological, completely different things. If you are down about a point, I'm going to suggest that if the BIS breaks above 1967, which was the high of the 9th of May, tighten up your stop on the BIS, because the next time that the IBB does rally, it could be a pretty sharp rally. You want the IBB to just break down now and within 5 to 7 days be under 220. Let me just double check I'm talking about the right number. IBB, yeah, the IBB, you want it, you want no rallies. You want it just to keep going down now. Break under 218 is already the level. In fact, I'll give you the exact number. It needs to break under 217. If it breaks under 217, it's starting to challenge the uptrend support in the weekly, and it's got that H pattern. So that'll be to your benefit. So I'm just saying to you, because you're a bit under the water in this particular issue, and it moves quite quickly, I would make sure that I don't do that again. Why? Because if in this H to M pattern, the IBB actually turns around the next time and holds the weekly support level, we might see a little bit midsummer, we might see a pretty darn good rally in the IBB, because some of these stocks have been beaten down. My eye is telling me that they're going to make lower lows and lower highs. That's the way it is right now. I want to just deal with that particular issue at this point. So I think you're in a great position to try to at least get your money back and then make a profit. Here's the other thing. If you start to make a profit, put a half of your position, put a stop in at your entry price, so you do not, at least on half, take a loss on that again. Okay?
Yes.
And then the other can ride, and if it goes even higher, that's great. You can even add back later on. You can even back the same day that you take the money off. But that's a new position, a new psychological position, and a new entry. Hey, thanks so much for calling, Charlie. Good luck. Thank you for calling. So, folks, I'm going to be down almost 200 points. I'll be back for the next 50 minutes with Larry's show. Stay tuned. Otherwise, I will see you tomorrow at 11 o'clock. And check out my opening call. I think you'll find it interesting.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.